Australian online investment platform Stake was launched in 2017. Back then, it was a zero-brokerage style share trading system aimed at millennials. It's grown to become one of the top broker platforms in the country for both Australian and international equities, and over time its customer base has widened. Stake now charges fees to investors and in the past couple of years has also branched out into self-managed superannuation. It's just promoted Jon Howie to Chief Executive, and we caught up earlier this week discussing the changes in share trading activity from Stake's mostly millennial customer base.
I think Stake's got a unique opportunity to be a big part of helping Australians build better financial futures for themselves. I think you've seen an industry over the last 20 years which has done a lot of great things in terms of building Australia's wealth as a nation, as in terms of helping build Australians build superannuation balances and things like that. But ultimately, what we know the data around a lot of Australians either don't receive financial advice or struggle to pay for financial advice. Increasingly, we're seeing investors looking to do it themselves, to participate in markets, to address things like cost of living and to make sure that they've got a financial future ahead of them and they're participating in the growth of assets, etc. And ultimately, I think Stake is uniquely positioned to be able to enable those investors to a large extent to do it for themselves, to give them access to opportunities, to give them access to other markets in a really easy to use platform and for a very low cost.
Yeah, when Stakes began back in 2017, it was sort of a zero brokerage style platform aimed at millennials. You now do charge small fees for ASX and US trades, but are millennials still the target market for Stake, or are you kind of shifted now?
They certainly are a very important customer base for us, and we see a lot of millennials signing up, as I said, to start to get involved in building better financial futures for themselves and using platforms like Stake to do that. But what we've seen as the business has grown and matured over the last couple of years is we're actually starting to attract a broader population of customers. We're starting to see slightly older customers in some cases with more wealth that they're looking to manage themselves. We have a self-managed superannuation administration platform, which has been really popular with that slightly older cohort of investors, again, who are looking for a really low-cost, easy way to manage their superannuation.
I know now you've been appointed Chief Executive very recently. I know it's only been a couple of weeks, but how's it been going? What are your priorities for this year at Stake?
Yeah, look, it's a great opportunity. It's a huge privilege to be appointed as CEO. To a large extent, I think what we're doing and what we have done in the last couple of years has been great. We've got great momentum behind the business. We're looking, as I said, to continue to attract a broader range of customers and ultimately to provide them with a broader range of services. So you can expect to see more products coming out from us over the course of the next year or two.
Just give us a sense of your place in Australia's online broking market. How big are you? What other countries do you operate in as well?
Yeah, so we've got operations in the UK, in New Zealand and in Australia at the moment. And in terms of the Australian broking landscape, it depends on which month you cut the data, but we're basically third or fourth in the market in terms of the overall size of the online broking market. And we're actually either one or two for international equities as well. So we've established a really strong space, particularly in that international equity space. And we're a very strong player in the overall market. We're obviously looking to grow that over time.
Yeah, I know you were looking at potentially buying out a competitor's Self-Wealth last year. Is potential consolidation still on the cards for you guys?
I think the industry will consolidate over the course of the next year or two. You saw through the COVID period, as I think a lot of viewers will remember, is that there was a huge influx of new investors to the online broking space. And you obviously saw some new businesses come to market to try and service the growth in that space. That growth has tailed off over the last couple of months. And I think you'll see some businesses that will continue to thrive, and we intend to be one of those. But you will see some models that struggle, and ultimately I think that leads to consolidation.
Yeah, you expecting to report a profit within the next 12, 24 months? Or?
So we're certainly aiming towards profitability as quickly as possible. We're currently in a very rapid growth cycle, so we're not currently profitable. We've got a clear path towards profitability.
All right, looking at the calendar year 2024, we're only a couple of weeks in, but what do you see as some of the big investment trends that we can expect over the next 12 months?
I think the continued growth in exchange-traded funds. So we see a lot of investors who are starting to use exchange-traded funds to build portfolios for themselves. I think as our customers come to the market, what they generally will do is the first opportunity they're looking for is to buy equities in a name that they recognise. So we see those magnificent seven stocks in the US are very popular still on our platform. But ultimately, as our customers evolve and mature and get more experience in investing, then they start to think about how do I build a portfolio for the long term? And that generally means they start to look at things like exchange-traded funds and more diversified exposures to the market. I think those two trends will continue.
Yeah, you mentioned this earlier, but 2020, the share market, there was a lot of interest, a lot of young people bought shares, bought into the market. But is that sort of interest tapering off a bit? Is it a bit of a tougher environment now for younger investors?
I think we certainly saw that interest level and I guess almost that excitement level taper off over the course of last year. Obviously, the US equity market in particular went to something of a correction into sort of the latter part of last year. Obviously, though, we've had a fairly strong rally, particularly in US technology equities over the last 6 or 8 weeks. And so we see investors continuing to look for opportunities. As the market goes down, obviously trading behaviour generally slows down a little bit. And as the market comes back, then we see trading behaviour accelerate again. Ultimately, I think our customer base in particular, on average, are actually pretty smart. They're looking for opportunities. Often they're very patient, but they will come back to the market when they think it's a good opportunity.
Another big theme this year seems to be accepted. Cash rates around the world, interest rates are going to start falling. So do you think towards the end of this year we could see more interest in people investing back into that tech sector, sectors like that, which have struggled a little bit over the past couple of months?
Yeah, it's a really interesting one. Obviously, US interest rates in particular have come off over the last couple of months, but we've actually seen them start to tick up again a little bit over the last couple of weeks. I think the US 10-year rate is back up to sort of 4.1 or 4.2 when it got down just under 4. Look, I don't want to predict sort of what's going to happen in the economy over the next 12 months or so. I think if you do see rates come down materially, then obviously that makes the tech sector more attractive. Those sort of rapid growth type exposures is what people are looking for. But I think one of the things that's quite consistent that we've seen is we've got a lot of investors, a lot of our customers are also looking to generate income and are looking to create a more steady stream of return from their portfolio. So I guess those are kind of the two ends of the barbell that we're seeing.
And the self-managed super platform that you launched a couple of years ago, how strong has that growth been in interest from customers?
So the interest from customers is really strong. The customers that we've got on board, they absolutely love the platform. We have gone somewhat slowly in terms of rolling that out because we want to make sure that when we do roll it out and we promote it to the market, that it's the best that it can possibly be. We're certainly looking at that as a core area for our growth going forward, and you can expect to hear more from us in the future. Now,
when you Google Stake, there's also another Aussie business called Stake, which is in the betting sector. Has there been any branding confusion between you two? Because your logos also look a little bit similar as well.
Yeah, look, I think naturally there will be some confusion there. Obviously, the name is exactly the same and the logos, as you say, are similar. Thankfully, we see most investors know who we are. And it's fairly easy to work out if you end up on the wrong website what you're looking for. We're actually in discussions with those guys around what that means longer term. But again, we continue to promote our business and the benefits of long-term investing, and we let them stick to their knitting in terms of the gambling space.
Jon Howie, Chief Executive at Stake, thanks so much for your time today.
Thank you.